Welcome to Accounting Focus. My name is Richmond, a young chartered accountant, and I'll be leading you in today's presentation, right? So basically, this channel is about, focusing on standard and solving past questions from ICA, ACCA, and Cima. And on today's episode, we are going to solve questions on initial measurements under IAS 16, right? So before I start, here is to pass a quick information. If you've not watched my previous video on IAS 16, where I lay down the principles, give you the breakdown of what the principle is about, then kindly tap on the link below to watch the video on the principle so that you come back, follow the question solving so that it makes the understanding more practical. Okay, so today we are going to solve two questions on initial measurement. Okay, when you say initial measurement, let me just give you a quick overview. When I talk about initial measurement is basically saying that if you recognize that, okay, these assets can be shown in your books, what is the value that you must give to it, right? So what is the first value you must show in your books? Or if you should acquire an asset for the first time, how should you account for it? We established the basis that on initial measurement, the asset is measured at cost, right? And we gave the breakdown of the cost. And all of this information can be found in my previous video. It's not a long video, so you can just quickly glance through it and you'll be fine, okay? So it must be measured at cost. Now, this cost has a breakdown. It has components, right? So we are going to, because we learned the principles in the previous video, we are going to make it more practical here by trying to put, the components into practice. So let's look at our question for today. So we are solving two questions, right? So we have Crunch Limited. Crunch Limited is installing a new plant at its production facility. It has incurred these costs. Cost of the plant being $250, initial delivery cost being $20,000, cost of site preparation being $60,000, consultants used to advise on acquisition being $70,000, interest charges paid to supplier for deferred credit, estimated dismantling costs to be incurred after 7 years, and then operating losses before commercial production. Required, find out the cost to be capitalized as per IAS 16. Now, I want to explain this thing before we even focus on solving the questions. Now, when it's about capitalization, okay, capitalization basically means that, you see, there are a lot of times that people see this in books and then they don't even understand. But when you talk about capitalization basically is talking about the cost that should be shown in the statements of financial position, right? In the financial position, the balance sheet. It will not be anywhere. It will always be in the balance sheet. I'll be getting. So when you hear capitalization, it means that we are adding up to a cost in the balance sheet. That is what it means. I'll be getting. And when you hear expense simply means that we are taking it to the P&L. I'll be getting. So capitalization means that it's going to the cost of the asset. So find out the cost to be capitalized as per IAS 16. So let's take the normal cost of the plant. So when you take the cost of the plant is more of like the purchase price, okay? So the cost, let's start from here. So the cost is $250,000. And that's the purchase price because it's part of the components of the cost, okay? When you talk about initial delivery and handling cost, now, initial delivery, when you bought the assets, let's make it practical. You went to the market to buy an asset and then you pay $250,000 for it, okay? It excludes delivery cost. So you have to pay for, the delivery from the market to your place of business. Is that not it? In doing so, this cost must be capitalized as part of the cost of the assets. I'll be getting it. So delivery. So delivery, 20,000. And in fact, let me even draw your mind on something. You see, sometimes you go and buy something from the market and you're like, as I'm going, because you realize that without incurring our costs, you cannot have the goods at your place of business or the assets at your place of business. So you realize that no matter what, you have to incur the cost. And this, what it means is that this is directly attributable to the cost of the assets. I'll be getting it. We also have cost of site preparation. So when you talk about the cost of site preparation, it must also be parts because in our previous video, we mentioned it, right? So site preparation. So let's say you want to, mount an asset at a particular place. Let's say the place is bushy, okay? You must incur some cost of, hiring some people to weed the place. Now, if not for the fact that you are bringing the asset to that place to mount it, you would have incurred that cost. Is that not it? So the cost of, preparing the land suitable for the asset to be mounted had to be incurred, right? So in doing so, that cost of site preparation must also be capitalized. So we have 60,000. Right. Now, we also have consultants used to advise on acquisition. There are instances where before you acquire an asset, you seek the advice of professionals. It could be engineers, it could be architects, right? That, what type of asset do you think I should acquire? What model? When should I acquire it? In doing so, you are seeking their professional knowledge. Is that not it? So that cost you incur for that consultancy, because if not for acquiring that asset, you wouldn't have incurred that cost. So that cost of incurring that consultancy fee, so this consultancy, it must also be what? Capitalized. So we have 70,000. We also have interest charges paid to supplier for deferred credit. So let's say what this actually means is that when you bought the goods, you didn't pay cash upfront, right? You bought it on credit, so the amount to be paid was deferred. Now, because it was given to you on credit base, it attracted some interest because it's more like a loan. Is that what it? So it has to attract some interest. Now you are saying that this interest charges, should we add it to the cost of the asset? No, we cannot add it to the cost of the assets because it's not directly attributable, right? So we are not going to include that. Then estimated dismantling cost to be incurred after 7 years. So as part of the cost of the asset, we mentioned removable cost. Is that not it? So you used an asset on a particular land or at a particular place for 7 years, but you realize that after you finish using it, you have to take it back. Is that not it? But there are instances where there are some assets that after using it, it destroys the land. You have to incur some cost to restore the lands to its original state. Is that not it? In doing so, this makes it an estimate. So you estimate that value because it's in the future. Is that not it? So that amount that you incur after when you are restoring the land, or that removable cost you incurred, is what is being brought here. So we must also add it. So dismantling. So dismantling, you have 30,000. All right. The next one is operating losses before commercial production. Now, this is not capitalized, right? This cannot be added as components of the cost of the assets, right? So you realize that the components of the cost of the assets is very clear. Operating losses, let me make it clear here. Any form of operational activities that you undertake before the asset is brought into business, before the asset is brought into use, okay, or is ready for use, any form of operating losses that you incur cannot be part of the cost of the asset. Are you me? So what it means is that this leads us to the cost of the plants of the assets, initial delivery and handling costs, cost of site preparation, consultancy, and then dismantling. So these are the only costs that will be capitalized as cost of the assets. Is that not it? So let's do the addition. So 250 plus 20 plus 60 plus 70 plus 30. So that gives us 430, right? So we are incurring $430, and this is the amount that will be shown in the statement of financial position. Don't forget that I mentioned that when you talk about capitalization, it means that what amount will be sent to the balance sheet. Is that not it? So our PPE on initial recognition would be 430,000 under assets. And I hope this explanation is very clear, right? So we are solving 2 questions, and I'm going to take the next question. So stay with me.